First quarter 2026 results for the property casualty industry shows a healthy underwriting gain at $16 billion. Here to discuss the PC industry's three-month results is David Blades, Associate Director, Industry Research and Analytics at AM Best. And David, first quarter combined ratio results were better than the previous year's first quarter, but still on par with full year results. What does that suggest to you?
So I think it suggests that the momentum that was seen through a really good 2025 year for the PC industry has continued in the first quarter of this year. And I think a lot of that's been driven by two key lines of business, personal auto and homeowners, two key lines from a personal line standpoint, which make up about 50% of the overall PC industry. From a combined ratio standpoint, as you mentioned, the accident year combined ratio is about 96.6 through the first quarter. So that's very strong. And even taking out relatively modest impact of catastrophes for the first quarter at 92, it's still very good result from that standpoint. From an overall operating performance standpoint, both pre-tax and net income are up or have doubled in comparison to Q1 2025, and policyholder surplus for Q1 26 compared to 2025 is up double digits. So we're seeing, again, the continued momentum of what we saw through 2025 into 2026. And I think that, the key factor from that standpoint, again, core underwriting staying strong for those personal lines of coverage, adherence to underwriting discipline, the continued impact and the continued positive impact of the drive for premium adequacy, and that's still coming through from on the premiums, and also enhanced pricing sophistication. I think that's also benefiting the companies as well. In addition, the adoption of technology continues to benefit PC insurers from an underwriting expense standpoint. Now, we will say that AM Best is looking for margin constriction by the end of the year in 2026, because we do see more competitive market conditions coming in and probably impacting certain lines of coverage, lines that we're seeing smaller renewal increases from standpoint of from a pricing perspective. We see that impacting lines on the commercial line side, like commercial property. We see it impacting cyber. We see it impacting D&O liability. So from that standpoint, we do expect some of the profit margins to show some constriction, but overall we expect continued strong results from the PC industry.
Net investment income results for PC insurers were a bright spot in 2025, and that appears to have continued in 2026. What's AM Best takeaway from that?
Well, yes, we saw in the first quarter about 10% increase in net investment income, and that's just a key from PC industry standpoint. The strong net investment income takes pressure off the insurers from the standpoint of when, whether it's catastrophes or just other market conditions make it tougher to generate underwriting profits. The strong and consistent net investment income is a boon to the insurers from that perspective and helps smooth out results. We see that continuing because we see some of the same conditions that led to net investment income, strong net investment income in the last couple of years, where we'll see strong cash flows, again, elevated yields and the benefit of strong equity markets. So we expect to continue to see insurers take advantage of their maturing securities from a fixed income standpoint and being able to reinvest those funds in securities that are paying higher coupon rates, and we expect them to continue benefiting from that standpoint. And again, right now the equity market is still presenting opportunities for investment income to be built up as well.
Is there a bifurcation between personal and commercial lines now relative to prevailing market conditions?
Well, I think we've seen the personal lines coverages, as I mentioned, homeowners and private passenger auto, in particular private passenger auto, we've seen them have two really good years these last 2 years. Going from 23 to 24, personal auto insurers in the aggregate went from a $23 billion loss to a $22 billion gain in 2024. So that's a $45 billion change in that 1 year. And then in 25 continued that momentum. Homeowners insurers did show improvement in 2024, but actually made sizable profit, underwriting profit in 2025. So on the personal line side, we see that those lines have been the driver, but we've definitely seen on the commercial side, the commercial property, helping to drive and generating solid profits. We've even seen commercial auto doing better, so generating a smaller underwriting loss. Workers' comp is still continuing to generate good results, and the other liability claims made line, which is again more of the professional lines of coverage, those lines have also contributed more to the underwriting profitability. So there's some degree of bifurcation in terms of the fact that the personal lines of coverage have been the drivers of the PC insurance improvement in the last few years, but commercial lines coverages have also joined in on that as well.
Thanks, David.
You're welcome, John.
That was David Blades, Associate Director, Industry Research and Analytics at AM Best. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.